Welcome to Commodities. Let's check out that old energy complex. Now, there are signs of progress between the US and Iran on their nuclear talks, and of course that could tend to release more Iranian oil ultimately onto the world market. The Iranian foreign minister says that the two countries reached a, quote, general agreement on the basis of a potential nuclear deal. I haven't seen any commentary from Washington. And let's have a quick look at the metals. We saw some pressure on gold today. The market trading is quiet because of the Asian Lunar New Year holiday. And quick look at the agricultural commodities. You can see mixed showing, wheat losing altitude. The consumer packaged goods or the packaged food companies under pressure right now. General Mills warned of weak consumer sentiment hurting production, and that dragged down other processed food companies, including Kraft Heinz and McCormick and J.M. Smucker. And yep, there's Kraft Heinz under a little bit of pressure as well. Some other commodity stories we are bringing you. We're watching shares in Kinross today. A mine in Ontario is getting fast-tracked by the provincial government. This is the Great Bear project in the Red Lake Mining District, and it's said to be the first gold development to participate in this program. Getting a bit of a giddy up there from the province. Shares in Sherritt plunging. The company plans to suspend nickel and cobalt production in Cuba due to fuel shortages. That stock under severe pressure today. And BHP posted earnings for the second half of 2025 that came in at the upper end of expectations. The company, of course, is largely about iron ore, but it's getting more and more heavily into copper. And let's stick with BHP here. Wheaton, or wow, that dates me. Wheaton Precious Metals, I was going to say Silver Wheaton. Wheaton Precious Metals is buying a silver stream on BHP's portion of the Antamina mine in Peru. And this is a gigantic streaming deal set to be the biggest in history. Wheaton is putting up $4.3 billion US in advance, said to be the biggest stream deal ever. Wheaton already has a silver stream on Antamina with dibs on Glencore production. And after this, it'll get a combined 67.5% of all the silver produced at that mine. We are joined by Randy Smallwood, who is, for now, Chief Executive Officer at Wheaton Precious Metals. It's great to see you, Randy. Thanks very much indeed. And basically, you're putting up the money.
My team is making it a very exciting last couple of weeks.
I know. Yeah, we'll talk about your plans because you're not going away altogether, I know. You'll be getting 20%. You'll be paying just 20% of the market price for vast amounts of silver from this mine.
Yeah, it's. We're very familiar with Antamina. We did the original deal with Glencore over 10 years ago, and it's been the strongest performing single asset in our portfolio. We've seen 17% more metal than what we expected on the original acquisition. So it is one of the reasons that we're so excited about being able to double down on this one. BHP's share is equal to Glencore's. It's only a slight difference. The payability for BHP's share is 90%, whereas for Glencore it's 100%. But essentially, it is a full double down in terms of silver. So really, becomes our second biggest asset within Wheaton, and quite excited to have such a quality asset at that level.
After the huge Salobo mine in Brazil, the Vale mine. Now, I read, and this is prior to this deal, I think it was a couple of weeks ago, that at current spot prices then, and silver has come off its highs, silver on paper was accounting for about 70% of your revenue. Now, I know that's a moving target, but does that sound plausible? Could silver have got that high as a percent of your total revenue?
No, last year, with the guidance a year ago, silver was about 35% of our revenue.
Okay.
With the updated numbers, we were getting close to 50, and with this add-on, we're probably about 55, 56% of our revenue right now. I guess when silver peaked at $115 here just recently, it might have been a bump higher than that 56%. But
right.
But yeah, your comment on Silver Wheaton at the start of this is we're starting to get a little bit more of a silver shine to us, aren't we?
Yeah, because years ago you started, your basic plan was, you guys silver doesn't get valued in a company like BHP. So we'll go in and we'll buy the silver, and our paper will get a much higher valuation in the market.
Yeah, we spent the first 10 years in this company looking for silver streams. And so it's only over the last 11 or 12 years that we started focusing on all precious metals, and we've done very well on the gold side. One of the challenges is looking for opportunities in the silver space. And so when something like Antamina comes along and BHP has huge capital needs, they're growing in so many different places and need the capital. You just make sure that you are set up so that you can take advantage of these opportunities. So yeah, it's tough to find good silver production, especially such high margin silver production, and pretty excited to bring this one in.
TD have a buy on your stock, but they do say that the initial deal returns look low on our production assumptions and spot silver. However, of course, the beauty of your model is that as the mine expands, you get more silver. They're calculating a pre-tax internal rate of return of only about 2.1% based on spot silver of $76 US an ounce. However, there's different ways of calculating. There's multiple different ways of calculating it. But are you going to rely on expanded production at this mine to really make it work, Randy?
Yeah, I mean, it's one of the challenges. It's not really a challenge. It's just the approach. It's the operating approach of the consortium that runs Antamina is to reserves must have tailings capacity. It must have all the infrastructure capacity. And so the measured and indicated resources are definitely of high confidence in our eyes. The inferred resources, again, excellent continuity and great grades. It is one of the highest margin copper mines in the world, and zinc. It produces both healthy copper and zinc production, but all at a very, very low cost. And so all the exploration potential, all the inferred resources and the exploration potential, we're comfortable that this is a multi-generational asset. They've never had a problem replacing reserves. The asset's now in its 26th year of operating, or 25th year of operating, and it looks stronger than ever. The land package, that's what particularly excites me. The land package itself has even grown from when we did the original Glencore transaction. I think it's about a 20% increase in covered lands within our area of interest. And so it's a life of mine deal, which means that we'll get our share of this silver for as long as this operation runs. And that's, as I said, we look at this as a multi-generational asset.
The silver, you're bullish. I mean, obviously you're bullish on silver. Let's have a look at silver over the past 1 year. It is off its highs. What price would you start getting concerned about this particular deal? Like silver is around 73 today. What price would you start getting? Oh gosh, would you start wondering? Gosh, should I have paid $4.3 billion US? There?
Well, again, it's multi-generational, right?
Yeah.
And so our business is to provide our shareholders access to high quality precious metals production for good long life assets, high margin assets. And this asset, first quartile, and good long life, long exploration potential and all that. So if you ask me what I think the price of silver, silver is a very volatile metal. Trust me, having been focused on silver for the first 10 years, it's got very high beta.
Yes.
And so, I don't get too concerned about the ups and downs. What I look at is the overall trend. And there's just so many factors that support that overall trend. That vector is still pointing up and stronger, and we are going to see some volatility as peace breaks out around the world, such like that. You're going to see that, but I'm just not confident in that being able to stick around long term. I'm hopeful, but not confident in that. And so I think there's two factors. One of the reasons I am bullish on silver is it's going to get pulled with gold. Gold is no doubt the main store of value, the main reserve commodity / reserve currency, and I am very bullish on gold long term. Silver gets that same benefit. It gets pulled along with gold, and so I have no doubt that there's that strength. But silver is also, I call it the most critical of minerals, because everywhere we use it in industrial applications, it makes the world better. It means we use less energy. It conducts electricity better. It has less resistivity. It means your batteries last longer. You get higher processing power, and so in this age of mobility and AI, silver is going to play an ever-increasing role to try and develop. I sit and think about where we're going with respect to AI and the processing power that's required, the demand for silver to try and give that processing power so you can have efficient AI systems in place. I don't think that's going away. Well, I just know it's going to continue growing, and so we're excited about silver, both from the industrial side and also from the precious metal store of value side. We just think it's a great place to be investing.
And Randy, just remind us, when do you step down as CEO and become chairman?
The end of March. March 31st is my last day as the CEO, and the team is just stepping right up. Haytham Hodaly will be standing in as the new CEO. I've known Haytham for over 20 years. It took me about 5 years to convince him to come and join me here about 14 years ago, and he's been an excellent partner of mine, and I'm so excited for him and the rest of the team. So, like I said, they're sure doing a good job making my last few weeks here exciting.
We'll be watching. Thanks very much, Randy. Really appreciate it. Randy Smallwood, Chief Executive Officer at Wheaton Precious Metals. Up next, the Canadian oil sector may well be in for yet more mergers and acquisitions this year. Low oil prices make it attractive to grow by acquisition. We'll hear from a top lawyer who was involved in lots of the deals last year after the break. Our guest represents one of Canada's premier law firms and has advised on 8 of the 10 biggest oil and gas upstream transactions in Canada last year. Now, there's a good chance the industry will see more takeover activity this year. We're joined by Grant Sawalski, partner and vice chair at Burnett, Duckworth and Palmer. Thanks very much indeed.
Thanks for having me on, Andy.
You guys involved in 8 of the 10 biggest deals. I was interested to see you worked with Meg Energy because not only was it taken over by Cenovus, but Adam Waterous of Strathcona came in with his own rival bid. So that kept you busy for one thing.
Certainly did. A very interesting deal and very unpredictable. And I think at the end of the day worked out very well for Cenovus acquiring, a premier asset in Meg. Though it certainly wasn't easy for them.
Yeah, I mean, I know you can't get into the details, but that's complicated when a big bidder like Strathcona comes in and there's rhetoric involved.
Yeah, I mean, the big thing is not get too emotional about it. It was business. The Meg Special Committee was clearly focused on maximizing value, and we saw some rather unprecedented activity, including a deal at the end between Cenovus and Strathcona to get Strathcona's support for the deal.
Yeah. Sorry, I interrupted you there. And then another big deal you were involved in, Whitecap buying Veren.
Yes, I mean, that was a more traditional deal. It was friendly. 2 companies that had fairly similar business plans. They were both building up their position in resource plays and evolving away from being conventional oil and gas companies. And, they came together to really get the size and synergies that are required to be successful in today's Canadian energy market.
What about this year? Do you think we'll see such a frenetic pace of deal making?
Well, I don't know if it'll be as busy, but it's certainly going to continue. I mean, the underlying reasons for growing through acquisitions are still there. The market pricing signal, as you mentioned in the intro, with low oil prices, not as many plays are economic at these kind of prices. So organic drilling, has to be reduced. The other factor that's very prevalent, and we've seen this now for over 10 years, is shareholders are requiring more returns, either through buybacks or dividends, and that's reduced the cash flow that can be invested in the business. And then finally, in Western Canada, of course, the whole question of egress. And, companies are not as willing to make long-term commitments for big projects if they don't know that they can get their product to market at world prices and then, face the situation we did 5 or 10 years ago when there was a huge discount on Canadian oil and gas.
What about U.S. private equity? They like to come sniffing around when things are cheap. Do you think we could see a big influx of that money?
Well, I think we've already seen some of that. We acted on the Wheaton transaction, and that was an example where private equity came in as the successful buyer. Certainly, we're seeing that, on the street and in the data rooms. There is interest. And as you say, it's primarily private equity. The only big public U.S. acquisition was Ovintiv's acquisition of NuVista, which is a pure play Montney. But Ovintiv had a long history in Canada, and they're already well established here.
Mm-hmm. What when the CEOs come to you and say, "Hey, I'm thinking about an acquisition," actually, how does that work? If a company is thinking of an acquisition, do a few board members and the CEO come to you and kind of run it past you? Or just give us a very brief description of how you initially get engaged by companies.
Well, usually there's long-term history with companies, and
right.
That relationship predates the transaction. But most often it's led by the CEO. And that'll mean planning with the management team before it comes to the board as to, both strategic and tactical implications of the particular acquisition. These acquisitions, to be on a friendly deal, 2 to 3 years is not uncommon.
Wow.
That the acquirer will start talking to the target.
2 to 3 years. Oh, my goodness. I don't know if I'd have the attention span for that, Grant. Thank you very much indeed. Grant Zawalsky, partner and vice chair at Burnett, Duckworth and Palmer. Up next, we're going to hear from Heather Exner-Pirro, a keen observer of the energy sector. She says for all of the Prime Minister's talk of being an energy superpower, there's far too much regulation and roadblocks in place. Right. Our guest says, sure, the Prime Minister talks about Canada becoming an energy superpower, but there's been a lack of action on what she calls a pancake stack of initiatives and rules and policies that she says inhibit energy development. We're joined by Heather Exner-Pirro, Senior Fellow and Director of Natural Resources, Energy and Environment at the Macdonald-Laurier Institute. Heather, always great to hear from you. Thank you for joining.
Great to be back.
So I'm reading your piece here. You do kind of let the Liberals have it. You say, yep, I do think Carney means it, but there's some serious action to be taken. Just describe the 1 or 2 sets of energy regulations or policies that you think are major roadblocks right now.
Yeah, for sure. And we were all pleased to see the Alberta federal MOU. It seemed like it kind of removed a logjam of what had been happening. But since that MOU actually has been signed, 2 things have come out of Environment and Climate Change Canada, which is the ministry responsible for climate change. One is a new discussion paper on a new industrial carbon pricing. Of course, the MOU says that we will be negotiating a new one from April 1st. So there's a sense that this indicates what the federal government is thinking. And it would be kind of a radical change from what we have today, and a dramatic increase up to about $130 in the actual carbon price, not just the head mark, but what people actually pay. So that's causing tremendous concern. And the other was the introduction of new methane regulations. ECCC has said that they estimate it costs about $30 a ton to meet it. CAP, the oil lobby industry, has said they estimate it'll cost producers $14.6 billion to comply. And the Canadian Gas Association says they estimate about $3,000 a ton. So quite a lot of divergence between ECCC is saying is possible and going to happen, and what producers say that they can maintain.
What is that then? Is it the Liberal Party worried about perhaps voters in central Canada are concerned about greenhouse gas emissions, for example? They don't want to go all the way in removing hydrocarbon roadblocks?
Yeah, I think it's part of that. Obviously, Carney seems to be acting more centrist or more to the right of a lot of his caucus and a lot of his cabinet, who still, hold climate policy very dear to their hearts. And obviously, within ECCC, it's a department that has attracted a kind of person that wants to see very aggressive, ambitious measures. And perhaps at the department level, there's, either trying to go off their own, trying to maintain the things that they thought they were supposed to be doing. But the difference between what the PMO is saying and what Hodgson, for example, is talking about when it comes to Calgary and what ECCC is actually implementing, the two cannot coexist. We can't meet that doubling of exports goal. We can't be the energy superpower and also have what are, significantly new layers of regulation put onto producers.
That's interesting. So Carney will have to put his foot down, do you think?
So the most generous explanation is that Carney has been busy. He is very busy, obviously doing a tremendous amount of things, doing a lot of trade delegations and off and about. And perhaps there wasn't the communication with ECCC. Perhaps it was a miscommunication with ECCC. Perhaps ECCC is just putting out potential ideas and they expect that it'll come out on the wash. But even in that generous application, I have to say when ECCC puts out a discussion paper like this, and the methane regulations is regulations, by the way, but even a discussion paper makes everyone in Calgary have to jump, have to do the models, have to do the submissions, distracts them from what we should be doing, which is the core business of improving our business model and being more competitive, and focus on how is my business going to survive with these regulations or not? What can I invest until I have certainty on what those regulations will be? So there's a tremendous cost just to throwing out potential ideas for climate policies. And then there's the actual having to figure out what these methane regulations mean, just as we're trying to get FID on 2 major LNG terminals.
The new Minister of Environment, Climate Change and Nature, apparently nature's been added on. Julie Daberson is a Toronto MP just across the Don Valley from where I live. But she has been a strong advocate of the fight against climate change, according to her bio. Do you think she is going to be listening to what you're saying? Do you think she's going to be on board about that perhaps regulation has to be rolled back if we are going to become an energy superpower?
Well, it is true that any cabinet minister serves at the pleasure of the prime minister, and Carney has been pretty specific on what his goals are, and obviously is making commitments, I think, to sell more oil and gas to potential trade partners abroad. And so I think it's a matter of, industry, again, having to do the work to convince Ottawa that actually, they can't just spend an unlimited amount on emissions policy, that actually it has to fit into their business plan. They have to be attractive for investors. They have to have a good return on investment. And some of these things either just add so much risk or add so much cost that it's going to make them comparatively less competitive. And so getting ECCC to believe that, I think they think that, the oil and gas industry just has all these profits and pockets of money, and anything that is thrown onto them, they will be able to adjust to. But I don't think that's the sense for the C-suite in Calgary.
We'll have to leave it there, Heather. Fascinating and provocative analysis there. Always great to hear from you. Heather Exner-Pirro of the Macdonald-Laurier Institute. We're out of time on commodities. The close is up next.